Bam! Jayson Waller here, true underdog. I've got Peter Mallouk here with me. He's an investor, financial advisor, an author, definitely in the wealth management business. You have done, I think, 3 books now. You have your own podcast. How are you doing, Peter?
I'm great. Good to be with you.
Hey, I'm excited to pick your brain a little bit, especially in today's world with the pandemic and the election and all of these changes in what's going on with people's investments and what should they look to do. But first, I'd like to get a chance to ask you a question on, you run a company called Creative Planning, right? What is that exactly right now that you're doing so people can understand for the listeners?
So Creative Planning is an independent wealth management firm. And what independent means is most advisors are tied to a brokerage house. Think of like a JP Morgan or a Morgan Stanley or a place like that. And some advisors work for independent firms. Creative Planning is an independent firm. We don't have our own investment products. We don't sell investments on commission, get paid the same no matter what, fiduciary to our clients. That's what kind of puts you in the independent world, is mainly a separation of product from the advisor.
Okay.
And we basically build portfolios for people to help them achieve their goals, whether it's retirement or paying for kids' college or whatever, and then help them with other things like legal, wills, trust, taxes, things like that.
So if I'm not mistaken, you've been doing this, you're running a $50 billion fund right now with your folks. Is that correct? For worth of assets? Is that what it is?
That's right.
50 billion? That's pretty big. Yep. I just got a wealth advisor not too long ago. He's with Wells Fargo. He's great, but it's not independent. You know, we've done some recaps and sold some businesses before. So super excited to be on that end of the spectrum. And he's a monster. He's watching that stuff all the time. Do you do that? Do you have those TVs on watching everything? You got a team that does that? How does that work?
So we're specialized here where there's separation between the person that's meeting with the client and building the plan versus the people who oversee the money. So, at Creative Planning, we would have a certified financial planner sitting with the client, building a plan, figuring out what their goals are, what money do they need, when do they need it. And then that tells the money managers how to build that portfolio out. And that's managed day to day by the money managers. And so there's a separation of someone who's full-time job to know where do you live? Do you have a second home? What's your tax bracket? Is your income going to change? All of that versus the person who's sitting at the computer all day, making sure we carry out the money management in a way that makes those goals happen. Definitely not a TV shop. And we're definitely not a day-to-day, hour by hour type place, more long-term oriented.
Okay, good. Well, hey, that's a new game for me that I'm starting to see a lot more of, especially with everything going on. I've heard the thing called cost averaging, right? I guess that's a big deal right now. So I see that you've done 4 books or 3 books?
3 books, another one on the way.
Okay, so that's what I was told. The Path that you wrote with Tony Robbins, that's your new one. Let's talk about that book.
That's right. So in the past, I've written books just about money management. The first one, 5 mistakes every investor makes and how to avoid them, was basically, here are the things you need to do and here are the 5 things, don't do them, and things will generally work out well for you. It was just about investing. The Path is really more about everything to do with wealth management. So how do you build a plan? How do you define your goals? Research that shows that positive experiences are much more impactful than buying things. And so think about your goals in that light. And how to develop a charitable plan, a retirement plan, get your will and trust right, make sure you don't pay too much for insurance. It kind of gets into the blocking and tackling of growing your wealth, protecting your wealth, and then transferring your wealth. Okay.
So writing a book with Tony Robbins, what was that like? I'm a huge fan of Tony.
Well, this is the second time I've done one with him. So we wrote Unshakable together, which was also about markets. And hey, we said there's correction or bear market coming all the time. Of course, a huge one just came. But the point of the book was you never know when it's coming and how to really navigate your way through there. It's fascinating writing a book with him because we basically sit down and brainstorm what's the message that I want to send to the clients. And then we talk about the human nature part of it and then the reality of the markets and planning part of it. And we laid out the chapters and then kind of divided out the work and read each other's stuff. And we move one thing I like is he moves quickly, I move quickly, so we knock the thing out pretty fast.
Does a guy like you have ADHD? Would you say it's fair to say you got ADD and you're ready to go all the time?
That's very fair to say.
I think so.
I don't want to sit still for 2 hours and listen to anything. I'd much rather, kind of get to the point really
Yep.
fast and move on to the next fun thing.
I like that. I think that's what you need to do. Anytime you're really successful, especially when it comes to money, you can't be sitting and waiting. You've got to move quick. So
I'm amazed at people who say they take a year to write a book. Like for me, I'm going to write a book. I usually write the whole thing in 3 or 4 weeks. I figure if it's in my head, I want to get it on paper. I don't want to have to pick up where I left off a million times. It just sits there lurking at me like a project. And so I just can't wait to get done and move on to
on a
the next thing.
personal standpoint, let me ask you about the book thing. I'm getting ready to start a book. I'm a little nervous. I've never really even read a full book. Do I write it?
Yeah.
Do I bring a ghostwriter in? Where do I start? How do you decide when you wrote those books? You know, you had the 5 mistakes, Unshakable in the Path. What do you decide what you're going to talk about? And subjectively, when you make that decision, do any of them ever cross paths at all where you're regurgitating something that's in the other book?
Oh, I definitely am pulling stuff from other books. I mean, we talk in the path when we talk about how to grow wealth and protect it and transfer it. Part of growing it is to not make market mistakes in the market. So we pull some of that from the 5 mistakes in, and some is to know how often corrections in bear markets happen. So I pull some of that from Unshakable in. But that's positive. You got to reinforce some messages, especially when it's in a new context, right? So I think it's nice when you see an author and they carry a thread and a philosophy through their books. I think it makes it more compelling. It reinforces the key ideas. In terms of writing, to me, it depends on, are you a writer? Like, so I write already every month or so for our clients. I write a newsletter. And so I'm used to saying, well, what are people worried about? They're worried about an election or coronavirus or whatever. And what are the main things they're worried about? And what are the facts associated with those? And how do we navigate that? And so I think that way, and I try to document that and make it semi-entertaining along the way.
Yeah.
To put a little bit of sugar around the medicine, right? And so I don't love having this big, huge project in front of me of writing a book, but I don't mind writing. What I'll find is I'll say, okay, I'm going to share this anecdote about this client. That's a great example, but obviously keeping it confidential. I'll dictate the whole thing into a translator, and then I'll have 2 pages of text, and that's part of the book, right? And so I do a lot of dictation, and I put the pieces together later, but I do it myself. I've got clients that have written some very successful books that they used a ghostwriter, where they basically sit down and they're interviewed and they share their story, and then someone else writes it. I think for someone who they don't like writing and they're not good at writing, that's the way to do it. I mean, what you're trying to do is share what's in your brain with somebody who will find it of value. And if you don't like doing it and you're not good at it, that's definitely a thing to outsource, because it's a lot of work.
Yeah, it seems like a lot of time, but you said you're able to get that done. You said 3, 4, 5 weeks?
Yeah, I mean, I think the key is I'm writing about things I know about, right? If you told me to go write about something that was a little out of my wheelhouse, I'd have to spend a lot longer researching it. So I know a lot of things. I can write the book and then go backwards and go, okay, I wrote all these things. Let's make sure I'm not accidentally wrong about something, and go look up all the sources and make sure I can back up everything, which allows you to keep a stream of thought. If you told me to write about anything outside of investments and planning, it would be probably a year-long process.
Oh, wow.
Getting to open up page 1.
So you also have a podcast called Down the Middle. How long have you been doing that? What's that about?
So I've been doing that for a little over a year. I've been doing it with Jonathan Clements. He's our director of financial education. He used to be a consumer advocate writer, personal finance writer for the Wall Street Journal. And then he retired, and I'd read him growing up. I love his books. He's very focused on common sense investing and focusing on things that really make you happy. He's done a lot of research and writing around that. And so when he agreed to come on a couple of years ago, he just writes letters for our clients like I do. And he approached me about this podcast idea, and I've really enjoyed it. It's a short one. It's maybe 15 minutes, 20 minutes, once a month at the top of the month. And it allows us to, put our brains together and share our thoughts with our clients. We're also writing a book together now too, which I'm excited about. And he's a fast writer as well. And so I suspect that probably be out in 2021.
Wow. See, that's quick, man. That's inspiring to know that, because I know my story, and I know running a business. This is my 3rd company I've built from the ground up, and I've never really done any investment. So this past year, made some money selling the first 2 companies, lost my butt on this business. And then we had a recap, and I had some cash. I have no debt. And I'm like, I'm sick of money just sitting in the bank. So I got connected from our private equity partners to a wealth manager, and that's been great. Right. And even during the pandemic and everything going on and an election, I've done well. What is the secret to that? Because I know, there's do's and don'ts in like a pandemic, which we never can, be ready for, but there's also elections all the time. What are some of the do's and don'ts that people might not know what to do, or that you do and that you're so successful?
Well, I think one thing that you did that's good is you start early. Like, as you get an advisor and you start throwing money into the account as quick as you can, as soon as you can. Time is a big advantage for investors. The longer you're in the market, the more likely you're to go up. I mean, if you look forward 1 year, the odds you're going to make money are about 75% in a diversified portfolio. But if you go forward 10 years, it's 98, 99%. It's the time in the market makes a very big difference. I think secondarily, I think if you own a broad basket of diversified stocks, it's very hard to lose money because you have inflation on your side, you have dividends on your side, you have time to get through the corrections and bear markets on your side. And then you have to accept shit's going to happen, whether it's coronavirus or an election that's contested or whatever, stuff's going to happen. And just ask yourself, if 10 years from now, is the market going to find a way through this? The answer is yes. 9/11, tech bubble, 08, 09, coronavirus, elections, somehow the price of a cheeseburger goes up. Somehow the price of a box of cornflakes goes up. And somehow the market tends to find a way too. So just being prepared for that mentally. So you're a young guy, you're going to have, it's not going to be coronavirus, but coronavirus, that market drop was 34%. That's the average bear market. Average bear market's a 34% drop. It happens about every 5 years, which means it's going to happen about 8 more times in your lifetime.
Wow.
Just accept that as part of it and keep throwing money in the portfolio and it'll work. And so then you get into things that can blow it up, trying to market time your way in and out. You can get on the wrong side of that, like a lot of people did in March and April. You could pick just a couple of stocks and they might work out great. They also could blow up. It could be Enron, WorldCom, whatever, and just not work out for you. So there are lots of ways to screw things up. But if you just do the basics, the probability of success is very, very high.
I think that's good advice. And I know I pulled money out early in March and then I lost. And then I put it back in a few months ago and made all that back, which was great. But I've had friends that stayed in and they did very well through this. And that makes me feel better that what you said, that 34%, that happens, every 5 years. That makes me feel a little better because I wasn't investing back in 08 and 09 when we had the fallout. I wasn't investing then. I had a business and it was a cash business and I did well. But, one of the things I think people need to understand, like my business tripled in size through the pandemic. And I know lots of companies did get bigger. I saw that. I mean, several companies grew larger and more profitable than ever before. We went from our top month being 25 million in sales to 63 million last month. So we literally tripled in 4 or 5 months. What do you think, what are the reasons for something like that happening on the aspect? And then you see businesses, the small businesses that lost their butt. They don't have stocks, but it feels like, at least to me, everything in the market seems to be getting better. Is that not right?
Yeah, I think that. So what you really saw is a redistribution of things. Yeah. So people kept buying things, but they kept going to their local store and they bought more at Walmart and on Amazon. And people stopped going to restaurants as much, but they started using Instacart more. Yeah. And people stopped going to more expensive restaurants. They started getting McDonald's and Chipotle more, and stopped going to movies, but they use Netflix and Disney Plus more. I mean, I've got clients in certain businesses that are having the best year they've ever had in their whole life. They'll never top it again. If you're in the business of selling RVs, or you're a residential real estate agent, or you own lake property, or you make boats, or you sell bikes, or you're in tech this has forced people online, you are absolutely crushing it, right? That's one end of the spectrum. Another end of the spectrum is restaurants, travel, and so on. And in between, everybody's kind of doing okay. Yeah. Some people are doing a little better than normal. Some are doing a little worse than normal. So people look at the market and they think it doesn't make any sense because there's chaos everywhere. Well, there's not chaos everywhere. There is a lot of real pain being felt in certain segments and huge upside being felt in certain segments. The diversified investors feeling a little bit of all of that and doing okay.
Why do you think people panic during the crashes? What do you think the reason is that they panic? Like, what is it that scares them so much? Like, even me in March, I'm like, oh boy, what am I going to do?
Yeah. I mean, like my kids and I will occasionally watch a horror movie, right? So I was while walking them through the Scream series. Every story is basically the same. You know how the whole thing's going to unfold, but you still jump out of your chair. You know what I mean? It's the same stuff every time. Close the refrigerator door. Is somebody behind the refrigerator? Is someone under the bed? All that stuff. We know how the story goes. Same with the Sandra Bullock movie. We still get it. My wife gets emotionally involved, pulls me in, but it's all the same story. but we get engaged because of what it does with our emotions. And while we know that a bear market happens about every 5 years, we know that average drops about 34%. We know some of them are much worse.
Mm-hmm.
Tech bubble 9/11, 08, 09 were 45 to 55%, very severe. And we look back on them and we go, oh, yeah, no big deal. They happen all the time. But when you're in them, totally different story
Mm-hmm.
to watch your net worth get cut in half. And usually something's actually happening at the same time, right?
Right.
Somebody has committed the biggest terrorist act on U.S. soil ever. And people on TV are saying, well, this is different. We're not going to recover from this. And you believe it because you're emotional and you're scared. Or you have the 08, 09 crisis. And everything seems to be collapsing, and real estate is collapsing, and these weird investments no one have heard of is collapsing, and banks are closing. And on TV, they're saying, we may not recover from this. This is different. And it's true, it's different. And then now we have coronavirus, right? So in March, we didn't know were 6% of people going to die. Goldman Sachs said more than 3 million Americans were going to die. We had no idea about the mortality rate, who it hurt, how it spread. And at the same time, your market's getting cut by a third. Your portfolio's getting cut by a third. It's the same beginning, middle, and end, but it's a different story. And so it has that difference every time. That's why the market's going down in the first place. So it's in those parts that you have to have that steely resolve that, hey, this is probably going to work out, right? McDonald's is probably going to be here. Disney World is probably going to be here. There's no guarantees in life, but betting against that is probably not wise.
Right.
It probably will be like the previous 100 corrections and dozens of bear markets, and we'll recover from it. And if I go to the sidelines here and lose sleep over it, I'm not doing myself any favors. But that's not human nature, right? So there's going to be another bear market in a couple of years because of that.
So you're pretty numb to this. You're used to this. You don't freak out like most, it seems like, would freak out. You're very calm, cool, and collective. Like, hey, we've been through this before. It's no big deal. You've got this. Do you look at this as an opportunity for some of the people who invest with you that you manage? Do you look at this as here's an opportunity to actually do better than what we've done? Is that how you look at it as well?
Yes. So what's different here is people are getting sick and some people are dying, right? Obviously, I would like that to be over. But when you go through a normal bear market, I view it as an enormous opportunity because when things are just moving along, you're just moving along. But when there's a bear market, you have an opportunity to buy more of the asset classes that are down that should recover and to place trades that can help your clients from a tax advantage and so on. So it is an enormous opportunity. In March, within weeks of the low, we were buying more in our clients' portfolio of all the equities that were down, and we were harvesting losses. And so our typical client today has losses on their tax return, but gains in real life. We don't get that opportunity if the market just went up a few percent this year. Right. We got that opportunity because other people were panicking. And so it's a big advantage. It's a big advantage. I think it was JP Morgan that said, you buy when there's blood in the streets. I hope I'm attributing to the right person. And I think that's right. That's really the opportunity to make a difference.
You know, do you handle a lot of real estate funds too? Do you think real estate's going to continue to get better? I mean, I've listed a house. We have like 4 or 5 houses because I've got a granddaughter and a daughter. Then they want to live where we live. So we go back and forth between North Carolina and Michigan. But we listed a house and it sold for more than what we listed it for. Then a buddy of mine listed his house. It sold for more than what he listed it for. And it's like you can't find homes. People are buying like crazy. I didn't expect real estate to be what it was doing now. Did you? And do you see that getting better?
Well, I think that coronavirus turned all of real estate upside down. So when people say real estate, they think I know you're not saying this, but most people think all real estate moves together, and that's not true. And real estate's kind of like the stock market. You can have travel and restaurants getting crushed, and you can have big tech and all that stuff doing really well. Same thing with real estate. So residential is on fire because people that were renting can now buy a home and make a lower payment than they were paying in rent because interest rates are at record lows. Mm-hmm. So our real estate agent clients are having a field day. Every residential home that's reasonably priced in America is selling really, really fast. Many of them sight unseen now. It's crazy. Yeah. So that part's on fire. Apartments are hanging on fine. Storage is on fire. Industrial's on fire because we know we need to contain the supply chain better and things like that. Office is suffering. We don't know how much are people going to come back to work. Are businesses going to renew their leases? Are they going to shrink their size? Retail's final death blow. It was already moving online, and this just accelerated that. And so you have these ends of the spectrum, and where you are in there makes a difference. You asked if we invest in public real estate and private real estate, so publicly traded or in a private fund. And Thankfully, it's in diversified funds that are getting through this just fine, but there's suffering taking place in some segments of the market, and some, like as you mentioned, residential, are just incredible right now.
How long have you been doing this, Peter? Because I mean, you really know your stuff. You're laying it out. I see that, in '83 was when the creative planning was founded, and you acquired it later. But what was your path to get to do what you're doing?
So I was doing legal and tax advice mainly for other advisors' clients, including creative planning's clients from 98 to '04. And then the owner of Creative, they had a few dozen clients, and it was a small boutique firm. And I took it over in '04 and started from there. And we do legal and tax in-house, manage money for individuals. We do financial planning as part of that. So instead of investing based on their risk or their age, we're really trying to invest towards their goals.
Mm-hmm.
And doing that without owning our own products. And really from '04 to today, we've seen a lot of growth as the market's getting more and more sophisticated and more receptive to that kind of approach.
That's really cool. So I see you've got family behind you. You're in Kansas City, right? How's the weather in Kansas City?
Today it's makes no sense, but it's 82 and sunny. Normally around now we're about 15 degrees cooler, but we'll take it. It's good. It's beautiful here in the fall.
Yep, I'm in Michigan. It's nice in the fall. It sucks in the winter here in Michigan. What about your winters? Is it bad?
It is nothing like I've been your neck of the woods in the winter. Nothing like that
Good.
At all. Nothing like even Chicago, but they're pretty. February is tough here, but we might see snow a few times. We don't see it, 15 times.
Well,
it's manageable. We can get through it.
Where could couple things? Where could people find your book and subscribe to your podcast?
So you can find our book by going online, and you can search for The Path, Peter Mallouk, Tony Robbins. It's also for sale on Amazon and at every major bookstore. Okay. Hopefully your listeners pick up a copy of that. You can follow me on Twitter, Facebook, LinkedIn, or you can go to our website and inquire to get added to the podcast list.
And what's the website?
Creativeplanning.com.
Creativeplanning.com. So two other questions. One, are you a Chiefs fan?
Huge. Yeah, everyone in Kansas City is a Chiefs. Everybody in Kansas City.
You guys got the greatest quarterback since Tom Brady came out, right? What's up with that?
We're not used to sitting in this position, so it's been very surreal.
You guys deserve it, though. I love that guy. That guy's solid. And then two, the election.
Yep.
After everything is said and done, everyone has their own beliefs. I believe, COVID's mysteriously going to start to phase out like it's like pneumonia or something. I've got friends that have had it. I've got family that has had it. We have 1,600 employees. I think we had 40 cases. One person was hospitalized. He was 68. He smoked. He had pneumonia issues before then. I have my own theories on it, and I've stated them before, and I'm not going to put you on the spot to do that. But after the election, regardless of which way it goes, I see everything even getting better. Do you see the same?
I think so. I don't know what winter is going to be like. Right? I'm not an epidemiologist. I have no idea. But I do think just diffusing the tension in the country a little bit, just getting behind this and everyone getting on the same page with how to deal with it. I think the psychology of it has become an unfortunate part of all of this on both sides. And I think the quicker we can get behind the political elements of this, I think the quicker we're doing what Europe's doing, which is moving on and accepting that there are populations that are at risk that need to be very, very careful, and that we're going to all go about operating hopefully in a very safe way. And we can get rid of the fringes on both sides, that are making this much more difficult than it needs to be.
I got to do a roundtable with President Trump 3 weeks ago, a week before he had COVID. It was one of the coolest things I've ever done. And there were 20 of us at the table, and I had a 12-minute conversation with him talking about how solar is not Democrat or Republican, it's American, and that almost 70% of our customers are Republican. And he was semi-aware of that, but I was shocked. And I never tell anybody which way I'm going to vote. They can analyze or think. But my point is to see how he reacted at that roundtable, and how he helped 4 or 5 people, including in the hotel and resort business, where the guy was like, I own all these hotels and resorts and there's nothing we can do. And he was helping. He was getting Mark Meadows to call some people and trying to get, it was the next level thing. He approved a permit for this railroad, this private railroad, to go from Alaska to Quebec down to the 48. And he was like, going back and forth with this lady, and then he ended up approving it. To see that in action, regardless, doesn't matter if I'm Republican or Democrat, whatever, when you get a chance to sit down with the president, you have in-depth 10, 12-minute conversation about your industry, and you watch the president at the time help 4 or 5 people in their business right there. that was moving. And that's what tells me no matter what's going to happen, I think we're going to be okay, because with all of this chaos that's out there and all of the he said, she said, and what channel you're watching, and, like you said, the market keeps going up. Houses are on fire for residential. Businesses continue to grow. Everything always ends up being okay here, right?
Yeah, I mean, I think like the only realism is optimism.
Yeah.
I mean, even when you look at the middle class is expanding in the United States, and it's expanding at the expense of the lower class.
Yeah.
There's been this big emergence of people from the lower class to the middle class, and we have over 1 billion people all over the world coming out of poverty over the next 10 years in India and Brazil and everywhere else. I mean, it's a very, very interesting time to be alive.
Yep.
I think my grandkids they're going to be in shock of video of people dying of hunger. I don't think that's going to be a thing anywhere in the world in the next few decades, because of humankind evolving to become more compassionate, more caring for others, combined with unbelievable innovation and technology, making it all happen together. And so I think for all the noise and all the fighting and all the angst that exists today, we're on the brink of really, incredible breakthroughs. We can't say this about any period of the last 10,000 years. This is something that's going to happen in the next generation or two. So it's an incredible time to be alive. And if you accept those notions, it's also a good time to be an investor.
That's right. Hey, very well said. Thank you, Peter Mallouk. I appreciate you joining the show. And that's a wrap here on True Underdog. Make sure you check out his book, The Path. Bam! That concludes another episode here on True Underdog. If you're interested in hearing more, make sure you subscribe at iHeartRadio, Spotify, Apple Podcasts, or the YouTube channel. You can always visit TrueUnderdog.com, subscribe to all of them. Make sure you check out our newest episodes coming out on Mondays and Thursdays. True Underdog, baby. Bam!